Welcome to the Road to 100 Million in Real Estate podcast, where you'll benefit from the opportunity to learn to become a skillful real estate investor. You'll get guidance from top industry producers, operators, and investors who are eager to help you learn from their proven strategies of success. Now to your host, Dorrance Constant.
Hey everyone, welcome to the podcast. I'm your host, Dorrance Constant. I've got another special guest on the show today. I've got Brett Bowman. Brett, how are you doing?
Doing great, Dorrance. Thanks. How are you?
I am fantastic. Brett, thanks for coming on the show today. And for the audience, I want to give you folks a little bit of a background on Brett. Brett's been investing for over 14 years. He's acquired over $30 million in assets spanning from single-family rentals, multifamily, industrial, and even mobile home communities. He has a background in high tech where he's managed multi-million-dollar budgets in hybrid corporate finance and large-scale program management roles. Again, Brett, welcome to the show.
Yeah, thanks, Dorrance. Appreciate you having me.
Well, thanks for coming on. Brett, we typically start the show with the same energy, whereas we want to know what's been the impact real estate has had on your life.
You know, the biggest impact I've had with real estate is just being able to have passive income. So I still have a day job, have the W-2, the dreaded W-2 that you hear people talk about.
Mm-hmm.
So it hasn't completely replaced my income or my lifestyle, but it's been really nice to have the extra passive income that does help me, maybe take a little more risk or be able to take a little more vacations with my kids. And, it also allows me to continue focusing, and we'll talk about this a little bit later, but it really has become more and more passive for me, where I'm able to have employees and a team that do a lot of the work, so I can focus more on my day job, which is something I really actually enjoy doing. So a little bit of both.
Wow. So you have a W-2 day job while you're investing in real estate. Now, are you investing in real estate passively, or are you actively investing in real estate? Would you tell us a bit more about that story?
Sure. Yeah. So I'm actively participating in real estate in the sense that I co-founded a company a couple of years ago called Suncrest Capital. My partner and I, Ryan Hill's my partner. He focuses more on the operations. So he is full-time, works at Suncrest, and all of the property managers roll up to him. He's responsible for home sales, any of our operations, so collections, project management, all those kinds of things roll to him. And then we've recruited and hired a team of 5 other full-time employees. Plus, we've got contractors, several full-time contractors that only work on our stuff. So with that, I technically am active because I'm a general partner on all of our projects. But for the most part, I'm able to keep the work to a minimum each week, where I'm focused on investor relations, some of the finance. I'm responsible for all of our underwriting and forecasting, modeling, all that kind of stuff. Legal work, any type of acquisition work. That's a lot of my background, so I bring that to the table, and that's what I focus on. But more and more, I've been able to get to the point where between virtual assistants and team members and just systems we've put in place, I'm able to get it down quite a bit.
Well, Brett, tell us more about the story that made you want to start investing in real estate actively, even though you were, that you are employed full time.
Yeah, good question. So I guess going back to when I was in 8th grade, even, I'll just go all the way back there. I had a history teacher of all people that just was really great teacher, kind of person that, you were excited to go to class because he was going to teach you something new in a really great way. We did an activity where we chose stocks, and then we followed him for a month, and we saw how did we do. And actually, I didn't do great at all. My stock lost money, I think.
Mm-hmm.
But he also would draw on the walls of the classroom, and I remember him showing us on the wall how time value of money works. So my 8th grade brain is just kind of working through this and just thinking, wow, that's fascinating. If I invest $10 a day or $10 a month, it's going to grow to this billion-dollar portfolio someday, right? And then over time, I started learning more about other kinds of investments, and went to kind of along the way, I stumbled upon Rich Dad Poor Dad, of course, like most of us, and learned a lot of the benefits of real estate and why that's more stable and better than the stock market, not only for stability, but ability to also have tax benefits, leverage, all sorts of things that you get with real estate that you can't get in the stock market. So that led me to being a truly passive investor. And at the company I work at, we have massive company I'm at, and we have a large real estate investment group that we talk about all sorts of opportunities. And this is how I got into syndicating initially, where I had learned from others that were participating in some syndications as limited partners. Got my feet wet by being a limited partner with a few groups and really thought it was pretty cool. I would read their performas, I'd look through their underwriting, and just kind of got excited about doing it. So I stepped up to a couple of them. I approached about doing kind of being a general partner on the side and learning from them, and also offering my services because, honestly, a lot of them don't have backgrounds in underwriting. So that's a weakness for a lot of these groups. So I was able to bring that to the table and just say, hey, I would love to do your underwriting. I'd love to do your acquisition work. And there's a lot of legal stuff that goes on behind the scenes that I would run. And I really enjoyed that. A lot of that's tied to my background too. And so from doing that with 3 different groups, I got a ton of exposure, ton of experience, built a really strong, broad network. And then Ryan and I met each other, and he'd already owned a small mobile home park. And he had actually just been visiting that same mobile home park when he drove past another mobile home park that happened to be for sale, but it just had a for sale by owner sign, nothing else, not on the market or anything. And we ended up buying that ourselves. And since then, we kind of never looked back. We've started doing our own syndications and have brought in a few dozen investors. We've raised about 15 million total in equity across about 1,400 units now that we own and manage. Almost all mobile home park units. We've got some RV and some retail in there, but it's been a fun ride.
Wow. What a story. So you were working full time, still had that same inspiration since you were in 8th grade. That came full face as of, just a few years ago. You've maintained your full-time work status, but have now invested on real estate, essentially, if you want to call it, on the side.
Yeah, it's a good way to say it, because it's not technically passive, right? Because I'm actively making decisions and managing it. And there are some crucial meetings I join, but at the same time, I've gotten to the point where I'm not having to spend a full-time job worth of hours each week in the business.
Well, Brett, I think there's that looming question right now is, man, how does he do it? What are you employing that allows you to, have a full-time job, passive, working as an active real estate and investor? Do you have kids as well? Do you have a family, or are you a single guy? How are you?
Yeah, it would definitely be easier if I was single, but no, I've got 6 kids. So we've got a full house of kids. And they're young. My oldest is 10. I've got a 15-month-old baby. So we've got twins that are 3, and holy cow, I don't know where terrible 2s comes from, by the way. I think 3 is way worse than 2. You've got a 9-year-old. You've been there.
Yes.
So really at the beginning, I'd probably say the first 12 to 18 months that I was doing it, it was a hustle. I was working probably 60 hours a week for Suncrest plus my day job. So I was stretched pretty thin. I was working. The way I would do it, I would time box where my day job, my W-2 job was obviously priority because that's what's keeping the roof over my head and feeding my kids, right? And I would time box that to about 9 to 5, Monday through Friday, as much as I could. Obviously, sometimes you're going to fluctuate. And then I would have mornings, so 6:30 to 9 or 6 to 9, depending on what it was, and then afternoons or evenings, and then weekends is where I would focus on building my business. And at first, it was just Ryan and me doing all the work 100% ourselves. We started to find some good virtual assistants that we could leverage. So I have a really amazing team of virtual assistants in India that do our underwriting for us now. So they're our first level underwriters. That was really, you learn when you're doing this, you start to learn bottlenecks. And the first major bottleneck we had is I was doing all of our underwriting. And it would take me a couple of weeks to underwrite something that should only take a few hours because obviously I don't have all the time in the world to be able to do that. So being able to have our underwriting team in India do it, and then I can come in and spend some time and kind of put the assumptions where I want them to be and double check where we're at with the numbers. That saves us a ton of time. We're able to do at least 10 times as many deals a month that we can evaluate by doing that. And then we had some others that would come in and do bookkeeping, marketing, things like that just really helped. And then over time, it's gotten to the point where we've been able to hire full-time employees that are onshore that can take over more and more of our responsibilities. So our first 3 hires were all people that were doing my job, or that I was doing those jobs. So we hired someone that did all of our investor relations, and I still do most of it, but she does a lot of the behind the scenes, the marketing, the blogs, the emails, things like that. Hired a financial analyst, and then a project manager. So it was like going from having my own full-time job plus the Suncrest job that I was doing three people's jobs at, plus having a family, right? And
Yes.
you kind of have to hustle at the beginning and use virtual assistants. Time box, I think, is critical. And then we can talk a little bit more about systems that we've developed over time that have made it so our whole team can be more efficient. But it's a lot of hustle at the beginning for sure.
Brett, I think what you've built sounds incredible, and I know there's a lot of people who can gain a ton of value from what you've built. Can we dive a bit deeper and get a little bit more transparent on some of the steps that you took to get there? You started speaking about time boxing, and then second, you mentioned virtual assistants. Can you talk about what virtual assistants are and how you were able to connect with those virtual assistants,
Sure.
and screen them, et cetera? Whatever your process is, Brett.
Yeah, absolutely. So for starting with time boxing first, I do still time box. I'm able to kind of time box each day, different blocks where I focus on either catching up on my investor emails or looking at a new deal or things like that. And then obviously dedicate the rest of my time to my job and my family. And I'd say I'm at the point where now I'm spending about 10 to 20 weeks building the business, or I'm sorry, 10 to 20 hours a week building the business, which is much better than the 60 hours a week I was doing a long time ago. So we're still improving. I think we're getting close to a point where we probably need one more employee to be, so I can be fully hands off. And I don't know that I'll ever be fully hands off because I enjoy it and this is something I'm passionate about. But that's where we're working toward. As far as virtual assistants, we love virtual assistants. I will say you have to do a lot of work to find the right one. Some of that means multiple interviews. Some of that means you try one out and a month later you're letting them go and going with somebody new. So speaking tactically, the site we typically use is Fiverr. I think it's Fiverr. I might have an extra I in there or something, but Fiverr.com. They're great. You can kind of select what pay range you're looking for, what skill set you're looking for, and then you can interview as many times as you want. You can have them submit work ahead of time. Just giving you a few examples, our bookkeeping, we started on Fiverr and we actually went through 3 different VAs before we found one. And I have a finance background. I'm not an accountant, but I know enough to be dangerous. So I was able to ask some questions, but ultimately you don't really know how great they are until they're actually starting to do your books. And then you start to notice things are like, okay, that's not working great. I would say, though, if you're looking for someone that's a little bit more specialized, like a bookkeeper, I think a great strategy is to have your CPA interview them or at least get some questions to ask from your CPA. I think that can really help. And it might cost you some of your CPA's time that they might bill you back for, but it's totally worth it in the end because, our first year, our CPA had to go through and clean a lot of the work that one of our VAs messed up. And that cost us a lot in the end, not only in time, but also obviously money to the CPA.
Right.
The other
that's a great tip to actually involve the CPA in the beginning. Wow.
Yeah, absolutely. And that's something that's kind of come from, lessons learned, right? The other group that we rely heavily on is that virtual assistant group I told you that does underwriting. To be honest, I kind of got lucky. They reached out to me over LinkedIn and just said, hey, we do underwriting. You guys interested? And so with them, I gave them a couple deals to just underwrite and see how they did. And they hadn't done mobile home parks yet. So I gave them, I think, a multifamily space just to test them out. And then when I got to the point where I could trust them, I gave them my model that I had developed for underwriting mobile home parks. And honestly, I think they're stronger than I am on the Excel skills, which has been awesome. They're super fast. They can do a lot of really good stuff. Happy to refer them. I know that they're looking for extra business. Just can't steal the hours. Just kidding. I rely heavily on them. So they've been really great.
That's awesome. So you were able to connect with these folks from Fiverr, and someone connected with you, I imagine, probably on LinkedIn.
Yep.
All right. Now, when you started setting up these VAs, did you have a coaching or plan or system already in place for them, or did you have them just produce what you had, produce what you said to produce? How did that work?
Yeah, initially, so we kind of treated it differently for both. For the underwriting team, we use a tool called Trello. It's just a simple project management tool that has kind of card-based Kanban boards. So you have lists and you can move things around. It makes it really easy. So we have a card for each deal. And almost immediately, I put them on the board. So they hadn't used Trello before, so we taught them how to use Trello. And putting them in Trello helped us a ton because I can just make a list of deals I want them to look at. And I typically will, get the very first 5-minute review of like, is it in the right market? Is it the right size? A few other things that I'll look at that I decide whether or not it's even worth the time. And then it gets added to their list. And then the next step is they spend 30 minutes looking through the financials. And we've given them a couple formulas that just kind of double check, okay, does everything check out? And if it does, then they'll move to the next stage where they spend about 1 to 2 hours fully underwriting it. And then that's where it'll come back to us for review. So we've got that whole thing has been, we had some of that out the gate, but for the most part, we've evolved it over time with their feedback and then us trying to find ways to be more efficient with our time as well as their time. And then on the other side, the bookkeeping group and then the other VAs, we didn't have processes up front. I think that was part of the reason why it didn't work out. We kind of threw them in and said, okay, at the time we were using Buildium. So I was looking for a bookkeeper that had Buildium experience, and I kind of dropped them in there, and that first one actually did know what he was doing. He just didn't work very hard. He would work a couple hours a week, and that was it. And I needed a lot more than that. The second one worked hard, but didn't know what he was doing. So it kind of just came down to that. So we've gotten lucky with our third one, has been very talented and works hard and all of the good things, right? The other thing that I think has helped us quite a bit is we found a virtual assistant that actually manages other virtual assistants. And so that can be super helpful because you vet the one main VA and learn their skill set and what they're able to do. And then as you need more people, like right now we're looking to hire a customer service VA that can help us with one of our RV parks that has like overnight Airbnb style cabins. And I'm going through her first, and she's already got a candidate lined up that has done customer service. And so the nice part about that is I trust her. She's on the same time zone, same location as him, so she can train him and get him up to speed. And any feedback we need, she's going to help with that. So that's something that's helped us a ton, is just going through one group where you can.
Wow, that makes a lot of sense. And what a lesson learned, right? It sounds like you received more value when you already had some kind of a process in place that you could then plug someone in and essentially maybe manage that system, manage that process in order to get the results that you really desired, rather than them coming in and giving them whatever they had, and which may or may not fall in line with the desired result that you wanted. Is that fair?
For sure. Yep, absolutely. I think you get in this temptation where like, okay, I'm busy, I'm in a hurry, I'm just going to dump this to them and see if they can figure it out. And really the better approach is to spend a couple hours with them up front, train them, make sure you answer all the questions, make the expectations very clear of what you're looking for, what the deliverables look like. We even go as far as, again, using Trello. This is just an example. You can use, I'm sure anything would work, but we have a Trello board for each virtual assistant. And so it says Rosa's board, for example. And in Rosa's board, we have a list that says, these are the things I need done today, this week, or this month. And those are just kind of ad hoc things. And then we have another list that's recurring that reminds her, okay, every week we need you to do this. Every month we need you to do this. And that's very common for VAs because they're doing things that are repetitive, right? So you're going to frequently have that. And so we found that by having those weekly recurring cards that they can just mark when they've done them for the week, that's helped us a lot too. And it's gotten to the point where we don't have to remind them. We don't have to stress, oh, is that process going to take place this week? Because we see it happening and they're on top of it.
Fantastic. And thanks for mentioning that tool. And we'll make certain to put that tool in our show notes. Now, Brett, you mentioned something very casually, and it sounds like throughout the process of you building their business that you were taking areas of the business and making certain that you found a replacement for some of the tasks to remove yourself from working 60 hours a week on the real estate business as well as work. Can you help us understand the strategies behind that process so you could begin to replace yourself, and even some of the priorities when you were choosing what areas of business to replace yourself in?
Yeah. So initially it came down to, there's a book we've actually recently read called Clockwork. And so even though we did this before reading Clockwork, I'll use the Clockwork explanation. Clockwork is similar to, you were talking before we started recording about the 4-hour work week. I think it's got some similar concepts to it. And the main concept he has is this queen bee role, where you've got, and every business has one role that is so important you can't risk it. So like at a restaurant, the chef is probably your most important role. So you're not going to want the chef out there serving food or walking people to tables or bussing tables. You want that chef cooking and focusing on making better recipes, those kinds of things, right? And so what we found is in our business, we have kind of two queen bee roles. We've got an acquisition side, and then we've got an operation side. In operations, our queen bee role is homes. We've got to be selling homes, moving homes, rehabbing homes. That's our business, right? And that's because we run mobile home parks, and in many cases, you own some homes, but you want to sell them. You don't want to own them forever, right?
Right.
So the other concept he has is he's got kind of a process of 3 T's. It's trim, transfer, and trash. And so what you do is you take your whole team, you list out everything everybody's doing, and you equate a number of hours to each task for the week. And then from there, you figure out, okay, which of these tasks should I just trash? Nobody's doing, period. Which ones can I trim? So I'm still doing it, but it's not as big of a deal. And then which ones can I transfer to someone else? And so I again, we didn't do this formally up front, but at the time, that's sort of the process I was going through. And the very first thing that we offloaded was bookkeeping to, again, that VA that didn't work out, the first one. And that was just because, I'm not good at this personally. This is taking a lot of time, and I'm sure I can find someone that's more talented, right? The next one was underwriting. And the process that I came to with that was really around, at the time, that was our queen bee role for acquisitions. I wouldn't say it is anymore because we have plenty of deal flow, but at the time we didn't have enough deals. And so putting underwriting at risk was really drag on our whole business. So being able to offload that to a team that specializes in it was dramatically helpful. So anyway, that trim, transfer, trash process can be super enlightening, really, when you, especially as a team, you sit down and you talk through all of that.
Awesome. Love that. Love the strategy. And with that, Brett, what are some of the roles that you have decided that you're going to keep close to your chest, and why did you decide to do that?
Well, the main one is investor relations. So I mentioned before, I have a coordinator that she does some of the emails, and she helps with like subscription documents, making sure we've got W-9s, all of that kind of stuff. So investors know to go to her for more tactical stuff. But I think I'll always be the one that's meeting with investors, talking to investors, answering questions. And that's just because I typically know these deals inside and out because I've been part of the underwriting and the due diligence and acquisition process. And then I've become friends with most of our investors as well. So I just like to continue building that relationship. So that's one of those things that I think is challenging to outsource because I've got I've also got this customer service background where I'm passionate about making sure we're providing the best service we can. So I'll probably keep that one close to the heart. Honestly, most other tasks I think I can transfer to other people, find people that are better than me at everything, train people to come up if they're not quite there yet. I think we've got a couple of really talented people that have we have high expectations for that will get there. So that's just building the team.
Right. Building the team, building the process and the systems behind it, and doing systematically removing yourself from roles that may bring less value, and focus yourself on areas that would bring you the most value. It sounds like that's been critical in your business. Well, Brett, what advice would you give to yourself when you started in this area of business? Let's say from the very beginning.
If I could go back to the very beginning, I would probably recommend that I read 2 books. One is Clockwork that I mentioned already. The other one is Traction by Gino Wickman. Hear that one mentioned a lot. We read both of those this last, it's been almost a year now. And so this whole 2022, we spent a lot of time talking about and restructuring meetings, restructuring agendas, even restructuring people's roles, all based on the insights from these 2 books. And if I could go back a couple of years and just have read them earlier, I think that would have helped me a ton. I think the other thing that I would have done is maybe slow down a bit on when we were hiring and how we were hiring and how we were onboarding. Like I mentioned before, sometimes it's tempting to just get somebody in a position and then let them loose. And you really got to slow down and make sure that they get the culture, expectations, they get where we're going. You really want to make sure that they understand your vision of kind of the longer term and how they play into it.
Okay. And Brett, first of all, thanks for that advice. because that's how we're going to take it, is learning from the areas where you could have improved from the very beginning. But are there any tools or resources? You mentioned a couple earlier in the podcast that you believe are just critical to your business.
I can't think of any tools or resources that are totally critical. Obviously you got to have strong property management software. We use one called Rent Manager that really is focused on mobile home parks. I was resistant to move to it for a number of reasons, and we ended up transferring earlier this year. It was a painful transition, so maybe that's another thing I would have told myself from the beginning is just start with Rent Manager. But the thing is a beast. It's got so much more insight, so many more capabilities. I think the other thing that I didn't really get super into this, but the other thing that's really set us up for success is that Traction book that I mentioned before. We follow Traction to the core. So it's really no-brainer stuff. Like one, you set quarterly and annual rocks that are your goals, right? But they're the rocks, and you've got kind of the analogy of the rocks, gravel, sand, how you like fill a jar, right? It's the Stephen Covey analogy, really. And then each week we review, okay, what rocks are on track, which ones are at risk, and then we have a discussion if they're at risk. And then it's a 90-minute every week meeting where we do rocks, we review our scorecards so we can see how we're performing, where are some areas of concern, and then we go into the last 60 minutes of the 90 minutes is talking about issues. So you have your five top issues, and then you've got steps for how to fix them. And that's where we spend most of our time is talking about issues and how to resolve them. And that's gotten to the point where, that's a 90-minute meeting that I can't miss. And at the same time, it's the only 90-minute meeting I really have to go to in the week because I get all the information I need and I know how we're performing. So that's been crucial. So I definitely recommend that book. Again, Traction.
What an incredible recommendation. Thank you for that. And Brett, is there anything that you're working on that you believe our audience should know about?
We actually just started doing something new called an open-ended fund that we've been really excited about. So there's the difference between like your typical fund is a blind fund where you might raise $100 million to go buy $500 million worth of apartment complexes, but you don't know where the apartment complexes are or what you're going to be buying exactly. And that might be over the horizon of a couple of years, right? Ours is a little different where we're raising small amounts as we have properties. So for example, we close on a property in August, we're closing on another one in November. In Q1, we'll close on another one, and we only increase the amount of the equity we need each time we have a new property. So the advantage of that is you're being a little more lean with the equity. You're not paying out returns on money you don't actually need to have. And you're also not getting ahead of your skis on acquisitions in the sense that you're kind of, sometimes if you have so much money sitting in the bank, you go buy things that don't necessarily make sense. Where we're waiting to make sure we have something that makes sense and then going and buying it. And so I think there's a ton of advantages to that. And we just launched it this quarter. So we're really excited about that new model that we're pushing out.
Oh, that sounds fantastic. Very interesting model that you've got there, Brett. And Brett, in your business, if there was one thing that you could change with a magic wand, what would it be?
What would it be? Right now, I want to say interest rates. That's been kind of the most challenging. It'd be great to see either interest rates come down or seller expectations catch up with interest rates. I think the cap rate and interest rate gap is too close right now.
Gotcha. I mean, wouldn't we all want to do that, right?
For sure.
All right. Well, Brett, it's really been a pleasure connecting with you. And I know our listeners are going to want to connect with you directly. What are the best ways for them to reach out to you?
Sure. Yeah. Our website is Suncrest Cap, short for capital. So suncrestcap.com. And my email address is just Brett with 2 T's at suncrestcap.com. Those are the easiest ways. I'm also active on LinkedIn if people prefer that way too.
Awesome. Well, Brett, is there anything else you'd like to share with us before we sign off?
Man, I think you got through everything there. That it was very productive, Darren. I appreciate it.
Well, thanks for coming on the show. We really appreciate you. You dropped some real gems today on the podcast. And on behalf of my listeners, we thank you again, and we look forward to staying connected with you.
Absolutely. Thanks a lot.
We trust that you enjoyed today's show. Visit archcapital.ventures to learn more about how you can leverage real estate investing to improve your life through passive income, financial freedom, and generational wealth.